Good afternoon, everyone. Honorable Janine Munyeishuli, Minister of State for Public Investment and Resource Mobilization at the Ministry of Finance and Economic Planning, development partners who are present, government officials, colleagues from the World Bank, all protocols observed. Good afternoon, good morning, good evening to everyone in the room and those who are connected online. I would like to welcome you to this launch of the 22nd edition of Rwanda Economic Update, whose special focus for this edition is mobilizing domestic savings to boost the private sector in Rwanda, and I'm sure you can also see it on this wall. My name is Kezia Mudembwa. I'm an external affairs officer with the World Bank, and I will be your MC for today. On today's agenda, we will start with welcoming remarks from our country manager, and then it will be followed by a keynote speech by our guest of honor, Minister of State at Minecofin. And we'll also hear a presentation from the authors of the report. We will also play a 3-minute video, animated video, which highlights the key findings and recommendations of the report. In addition, it will be followed by panel discussion before wrapping up. So it is a short one, but we would like to make it very engaging. As you all know, nowadays we have conversations online, and I would like to encourage you to post, repost, share on Twitter and other channels that you are on. And our hashtag, and I think the IT team can put it up, is Rwanda Economic Update. And you can tag World Bank _Rwanda. Without much ado, because we want to make sure that we spend more time listening hearing about the report, I would like to welcome Dr. Sapunde, who is our World Bank country manager for Rwanda, to make his welcoming remarks. Over to you, sir.
Honorable Janine Munyeishuli, Minister of State for Public Investment and Resource Mobilization, Mr. Herbert Asimwe, Head of Financial Sector Development Department at the Ministry of Finance and Economic Planning, Dr. Moise Bigirimana, Manager of Financial Inclusion and Education, National Bank of Rwanda, Dr. Diane Karusisi, the CEO, Bank of Kigali, Abba Prasad, Practice Manager, World Bank, Mr. Zano Mataruka, IFC ResRep, Mr. Rugis Rugemashuru, sorry if I messed that up, the CEO, Rwanda's Social Security Board, distinguished government representatives, distinguished private sector representatives, colleagues from development partner agencies, and esteemed guests. Muharo. I have the pleasure to welcome you all to the launch of the 22nd edition of the Rwanda Economic Update. Published twice a year, the update analyzes recent economic developments and prospects, and provides an in-depth examination of selected priority economic and policy issues for Rwanda. The current edition of the update focuses on mobilizing domestic savings to boost the private sector in Rwanda. The World Bank prepared this report in close collaboration with the Rwanda Social Security Board and the Ministry of Finance and Economic Planning. We are also grateful to the contributions from the National Bank of Rwanda and the National Institute of Statistics for Rwanda. The data, comments, and insights provided by these institutions have given substance and helped shape the recommendations that are laid out in this report. This report is indeed a collective endeavor of many players, as it also involves staff from several parts of the World Bank Group, including the Macro Trade and Investment Group, the Finance Competitiveness and Innovation Group, the Long-Term Finance Sector, the Treasury of the World Bank, and the IFC groups. My colleagues will be sharing in more detail the findings, but have allowed me to briefly mention some of the main conclusions and policy recommendations you will hear more about. Despite a challenging global environment, Rwanda's economy showed some resilience, growing at about 7.6% in the first 3 quarters of 2023, supported mainly by the services sector. This growth was accompanied by improvements on the labor market, although the unemployment rate remains high. Another positive development is the sharp decline in inflation, which slowed to 6.4% in December 2023, aligning with the National Bank of Rwanda's inflation targets for the first time in 20 months. The improvements in domestic food production that accompany this reduction constitutes substantial relief for the poorest, who devote a larger share of their expenditure to food. However, challenges created by previous price increases on the welfare of the most vulnerable still deserves a great deal of our attention. Maintaining Rwanda's development trajectory and achieving the goals outlined in Rwanda's Vision 2050 will require increased efforts to shift the drivers of economic growth towards a private investment-led model, given the country's shrinking fiscal space. Rwanda faces a challenge in mobilizing domestic savings, critical for private sector investment, and to reduce the country's vulnerability to diminishing external finance. While financial inclusion has risen sharply with significant transitions from informal to formal savings methods, Rwanda's savings rate remains low compared to regional and aspirational peers. This economic update we are launching today has made a long list of specific recommendations on how to build on an already impressive government reform and investment agenda to further enhance savings. Please allow me here to touch on 3 of them. First, the Ejohiza program, the long-term savings program introduced by the government in December 2018, has had spectacular success, notably in terms of coverage. At the end of 2022, there were almost 3 million participants, representing 22% of the population and 37% of the workforce. The update identifies opportunities to further improve the level of savings, which is just around 10,000 Rwanda francs, through, first, increasing target groups beyond cooperatives by also enhancing efforts to target urban dwellers. Second, revisiting incentives by allowing short-term access to funds, which is not possible now. And third, adjusting the minimum savings level to qualify for matching incentives, which is 18,000 Rwanda francs as of now. Second, a key recommendation is to leverage the expansion of digital financial services to boost mobile savings by supporting the integration of non-banks into the payment system and allowing non-bank e-money users to pay interest on e-money accounts, as is currently the case in countries like Kenya, Tanzania, and Ghana. Third, remittances along FDI constitute a critical complement to domestic savings and should be pursued more aggressively. There is a need to reduce the high cost of remittances, leveraging the East Africa payment system, and engaging the Rwanda diaspora in capital markets. Several countries like Senegal, Brazil, the Philippines, and Indonesia have issued diaspora bonds to tap into savings from abroad, and obviously this needs a clear strategy with many channels available, such as mobile apps or the ability to purchase without a local bank account. The World Bank stands ready to support the government to take these recommendations forward. We will also continue our long-term and vigorous efforts in the country on financial sector development to promote a sound and resilient financial sector that is well equipped to mobilize resources in support of a thriving private sector. As some of you might know, our Access to Finance for Recovery and Resilience project, which is a $257 million project with AIIB, which was approved in 2021, includes a strong component on access to finance to address challenges facing the private sector. The additional finance of $100 million added to that program approved in FY23 is helping the government to tap into new sources of long-term funding through domestic issuance of a sustainability-linked bond issuance program by the Development Bank of Rwanda, which is the first in the region. Our Rwanda Housing Finance Project, approved in fiscal year 19, aims at expanding access to housing and finance to households and supporting development of capital markets and long-term sources of finance. It is also supporting private sector developers through the government of Rwanda's infrastructure support program. The Green Finance Investment and Trade, which is a $250 million IDA support with co-financing from KfW of $20 million, includes reform actions to accelerate the digitization of savings groups and to improve financial inclusion with a particular focus on the prevention of discrimination against women. So let me close by, basically saying that I look forward to what I hope will be a fruitful discussion of the challenges and solutions to accelerate the mobilization of domestic savings and financial inclusion, to improve the country's resilience against global shocks, support private sector development, and reduce poverty. Murakoze.
Thank you very much, sir. It is now my pleasure to invite the Honorable Minister to make her keynote speech. Welcome, Honorable Minister.
Good afternoon, Midway. Dear Sir, World Bank Country Manager, distinguished government officials, colleagues, distinguished guests, good afternoon again. I had so many things to say, but it seems that Sir has covered a lot. I will try to do the other side of the job. Thank you for all the great insights from your speech. It is my pleasure indeed to welcome you to launch this 22nd edition of the Rwanda Economic Update. And first and foremost, I would like to congratulate the World Bank team for the successful edition of the Rwanda Economic Update. Over time, these editions of the Rwanda Economic Updates have been analyzing the current economic situation, economic outlook, as well as addressing issues of importance for our country's economic development. Today's edition in particular aligns with our philosophy. Growing national income to build economic strength and sovereignty is at the very core of the development ambitions of Rwanda. Moreover, the Rwanda Economic Update is an important analytic economic exercise which serves as a vital input for the directionality of our economic policies. These insights are fundamental for informed policymaking, which, as you all know, pave the way to build a solid economy. I would like to do justice to the report. The analysis in these few pages, actually not as big as I thought it would be, are important. I will share with you a few highlights of mine and at some point really quote the report itself. As Sar has reminded us in his opening remarks, our economy has been resilient to many shocks of the last 3 or 4 years: the COVID-19 pandemic, the geopolitical tensions and conflicts, weather and climate shocks. Our growth for 2023 is likely to be around 7%. The high inflation we experienced over 2022 and 2023 has started to slow down, which means that the outlook for this year is optimistic. To quote the report, when it comes to the savings side, NST1 development strategy has set the national target to increase gross domestic savings rate from 10.5% in 2017 to 23% in 2024. Rwanda had a rate of 14% of GDP in 2022, meaning that there is room to improve our national savings strategy to match our ambition. The report is quite polite. We see that there is quite a leeway between what the objective we had set and what we have achieved. As much as the report confirms the effectiveness of government interventions and programs to boost financial inclusion, standing in 2022 at 93%, the report rightly says that more can be done. Informal savings groups continue to be preferred over banks, mobile money and Murenge SACCOs as well. We should then ask ourselves what pushes our population to prefer those informal channels of savings, the advantages they see, and if this can be replicated by formal ways and products for saving in the kind of what Sarah was suggesting in terms of policy making through digitization. We cannot talk about mobilizing domestic savings without mentioning, of course, Ejo Heza, the government-defined contribution savings plan, which has achieved coverage of 27% over the working age population in the last 4 years. Many Ejo Heza participants are low-income households, and the formal sector workers comprise 87% of savers, of which 19% are women. The rapid growth in the Ejo Heza savings scheme offers a promising opportunity to increase low-income households' ability to save. I am confident that the collaborative spirit which has brought us together today will drive us to success in mobilizing domestic savings to boost the private sector, ensuring the prosperous future of our economy. I would like also to take stock of the 3 highlights and directions in terms of policymaking advisory given to us by SAR in kind of summarizing the reports, and I quote mentally, different incentives for Ejo Heza, digital financial services, non-banking e-money, remittances, of course. These will certainly be looked in depth and to comfort you. I don't know if it comforts you, but these are also venues that we've been ourselves at Minecofin exploring. On that note, I wish you all fruitful and insightful sessions, and looking forward to all of us making best use of this report. Thank you.
Thank you very much, Honorable Minister. Now, ladies and gentlemen, I would like to invite Dr. Peace Eme Niyibizi, our country economist, to make a detailed presentation about the report. Peace, over to you.
Okay, thanks. Honorable Minister, all distinguished invitees and participants, good afternoon. It's a pleasure again for me for the third time to present you the Rwanda Economic Update. As I think we did last time, and it is in the spirit of the Rwanda Economic Update, we always have two parts of the Rwanda Economic Update. We always start with like highlighting the recent economic development, and I know everyone knows it's like a recall. I know Minecofin does, Bernard does. We just present what is important, I would say, highlights of the economy. And I will go in the second part, which is about mobilizing the savings in Rwanda. So for the key message, maybe I'm going to repeat what Honorable Minister said and what SAR said, is the resilience and adaptability of Rwandan economy in face of several shocks. The second one is about the achievement that Rwanda made in terms of savings, especially through financial inclusion and fiscal and fintech, but we're still saying that there are still potentials to tap in order to achieve Rwanda's ambition. For the Rwanda Economic Update, as all of us have known, we have started this year with challenges. Remember, we had, let's say last year, 2023, with challenges. We had the global environment, which was not like good to Rwanda, where we had most of the price for export items going down. I would say coffee, tea, even some metals, because of the global demand, especially in China, which is the most consumer for the metal that we export. We had also the agriculture, which was not going well for the last 2 years, and it was exacerbated by the floods we had in the first half. But we had also inflation, but good enough. The economy grew well. That I said they showed some resilience and adaptability. And in the first 3 quarters, we almost had 8% growth. If compared to what we were supposed to be projected, it was 6%, but we expect that is the growth for 2023 will be above 7%, because we had some resilience and adaptability and some measures taken by the government to sustain the economy. So when you look at the demand side and the supply side, it was mostly the investment, especially in construction, I would say. Construction, remember when we had flood, the government had to reconstruct what they have destroyed, especially in the flood of the first half. That driven up some capital expenditure, and we have also some other ongoing construction work sustained by the government. And I would like to recall that in 2023, we had like a stoppage, if I call it stoppage, or a negative growth, either in investment and construction. Why? Remember, there are some investment undertaken in 2020 and 2022 under COVID period, which were like completed. So we had investment and construction going down. But since the second quarter of this year, of last year, we saw investment and construction going up. We can't ignore the service, which is the major driver of growth, especially through the tourism, through trade and transport. that's, I think, that's the main driver of growth in 2023. So, as I said, I will be repeating what they have said. You remember this time last year, the inflation was almost 20%. But the recent statistics, by end January, the inflation is 5%. We are now on the target. The target of the central bank is 5%. So for December and January, we are within the target. The target of the central bank is 2% to 8%. But what they want to achieve is 5%. In January, we are at 5%. Why? Because we have seen commodity prices declining on the international market, especially energy and fuel prices. We have seen food declining because agriculture saw some resumption, especially in the fourth quarter of this year. And also there are some subsidies. Remember, I want to use the word in Rwanda, that Rwanda has put in, especially for fuel, for some taxes to import foods, to some imported food, and some on transport. All those measures has now pulled down the inflation while within the target. And according to the central bank, this year we are continuing to be in the target. So those are a few highlights from the macro, but now I'm going to present the main topic of this report. So the outline will be presenting like 5 points. I'm going to present the state of the domestic savings in Rwanda. I'm going to borrow from one of the study and present what determines the behavior of savings at high level, especially through the informal savings. I'm going to look at the third point, especially what government the potentials that we do have, especially through the financial sector and the remittances. That is the potential in which government could tap in to increase the domestic savings. So the fifth part will be about what policy measures can be included, can be applied maybe to tap into those savings. So for the status, we have seen some state development, especially in the financial sector, which, because of government measures, has put in place, especially in terms of fiscal financial inclusion. You can see that there are more uptake of bank account and mobile money, which is a mean of payment, also meant for savings. So for the second graph, you can see, like over a period of 28 years, we had like an increase in the uptake of bank product by more than 8%. And you can see in the yellow part, the informality to some extent, or people are not saving, the proportion has reduced from to 14%. This is because of some policies that government has put in place to increase the financial literacy and the financial inclusion. However, so there have been that increase in government policies. We have seen like the savings growth level has stagnant in terms of percentage of GDP. Maybe we look at normal terms, we can see it has increased, but when you look at it compared to the size of the country, it has stagnant. And when you look at the peers, Rwanda savings is still low. And as the Minister Jeanne said, compared to the ambition that Rwanda has, the level is still low. So something needs to be done. In the next section, I'll be trying to look at what has been, I'm going to borrow from the study done by IPA to look at the behavior at household. We know that most of the household, especially in rural area, they're doing savings at the informal way. It's like community-based savings. I think everyone knows so-called tontine, or in Kinyarwanda it's called the ibimina. So that's mostly what is used compared to the bank using the formal ways like in the financial institution. But of recent, we have seen also the uptake of mobile money and the Mulenge Sacco. So the main reason that I identified that people do save is mostly for consumption. That is normal. It's for education and for business. That is the three main reasons that they found out that households do their savings. So again, you can see that the education attainment could influence either if I go formal or informal. So in one of the study of this Finiscope, we have seen that most people who are educated tend to go to formal, using formal ways of savings, while people maybe primary level or low, they continue to use mostly the community-based savings group. So now let us look at the three potential that the financial system provide that can contribute to increase the savings. One is the ejoheza, as Honorable Minister said, and Sir, that is the many scheme that could tap mostly the savings from the informal sector and maybe bring it to the formal way and allow either the banks or the government to use it for the development. So I wouldn't repeat the development that has been done, but by over the 4 years, we have seen that more than 30% of the people have already saved, but you could say is still again attracting low household income, which I think was the purpose that government put it in the place, because there are like untapped share of the population, especially the low household and informal sector, which were not brought into the savings, the formal savings. The second one is the insurance part. The insurance, normally, where the insurance sector is developed, that is where we can fund, where we have a lot of money from that. It's where the bank they get a deposit. In that case, the insurance can be used as an aggregator of capital into productive investment. Let me give a simple example. If, for instance, we have a strong sector of insurance sector, banks would have enough deposit, and therefore, especially long-term deposit. That's the thing, because like our system, banking system, most of the deposits they have, they're short-term, because it is my deposit, is your deposit. But the corporate one, especially the insurance, is small. And most of the insurance that is taken, like in Rwanda, is not for health. Is for my car, for your car, something that is always the banks, the insurance also uses for their own business. But because of the low uptake of insurance in Rwanda, also we are still challenged in terms of mobilizing savings. That is another source that Rwanda could tap into too, and develop their savings. The third one is the capital market, especially the retail bond government. Capital market, in normal circumstances, they aggregate their domestic capital from several households, especially for long-term investment. And when you offer the retail trading, especially the government one, to offer that opportunity to the population and the diaspora, it could also increase the domestic savings. It could also accumulate funding, especially for long-term investment. That's another opportunity also government could look into in order to accumulate more savings in Rwanda. We can't forget the diaspora, as I said. The diaspora plays a big important role because on an area basis, I would say over the last 5 years, we can see that the remittances have averaged at least 4% of GDP as sent to Rwanda. That is an important source of resources to Rwanda. But as I said, it has coming bigger than a foreign direct investment. it's mostly used for education, because maybe my relatives will send me money to pay school fees for kids, and especially for entrepreneurship. And the recent development I have seen mostly were spurred by the development of use of fintech, especially the money transfer operator that are being installed in Rwanda. However, despite all effort have been put in place, we're still having challenge of a high cost of transfer. Let us say in the third quarter of last year, for instance, if someone will send you $200 US from Kenya, you have to pay like 6% of it as transfer. You could understand most like 12 or $24 already gone out of the 200, which means the cost of transfer is still high. Maybe this is another opportunity how a government could look into too, so that they can increase, especially the participation of remittances into the domestic savings. So in this last point, I'm going to try to summarize some of the policies that Honorable Minister and Sir haven't touched on it. So the report says that we could have some incentive and effective incentives and subsidies. So let me give you an example what is happening, especially with the treasury bonds interest. When someone invests in treasury bonds, the interest, the withdrawing tax is no longer 15, is now 5. That is kind of incentive that Rwanda has put in place in order to mobilize the domestic savings through the government bond. So that is an effective one. So we think that there can be some other incentives, but in an effective way that cannot put in the jeopardy, could harm the fiscal space of Rwanda, so that they could try to bring, especially the savings from the informal into the formal ways. That is one recommendation that the report says. The second one is about the strengthening the Ejo scheme. As of now, I think that when you are a member of Ejo, you can use money when you have achieved 4 million. That's the mark. So we thought maybe allowing people to access some portion of the money, maybe not reducing that threshold of 4 million. It could incentivize the people to go to subscribe to Ejo. So that is one recommendation, maybe for strengthening the Ejo. The other one is about the matching. So far, when you're saving 18,000 per year, the government matches your contribution. Maybe to incentivize people to save more, why not increasing that threshold from 18 to some amount? Maybe people will say that if I do 18, government is going to add another 18, but maybe 30. But that is a subject of discussion too. So another one is the integration, especially for Ejo with banks, SACCO. I know mobile operator, they are doing it, but it will also be another way of easing the collection of saving through those platforms. So from the study done by IPA, it was mentioned, it was said that most of the female are the ones participating in most of the informal or the tontine or the community-based group savings. Maybe if government encourage women to adopt the product tailored to the needs of women, maybe we can remove them from that informal way and bring to the formality and increase the savings of Rwanda. So designing product in a way that tackle both the behavior and operation challenge by maybe faced by low-income women would also increase the savings in Rwanda. So another recommendation is about promoting customer-centric. And in this way, we're saying that the authority may consider coin provider to prove that their savings, pension insurance, have been developed using customer-centric approach. Like Rwanda needs to put in some regulation to catalyze innovation in the savings sector while leveraging the authorities that shape the market. So another recommendation is about the use of digital services. So we know sometimes the use of these digital means comes with risk. So we need to balance and to have a legal and a regulatory framework for the digital to prevent most of those risks associated with the use of technology. So you have also to strengthen the digital and the financial literacy, especially as most of this is being done through Irembo. I know there's a program with Irembo where they're doing some more digital literacy. Maybe the government could take opportunity of that ongoing program for Irembo and add the financial literacy to tap some of the to make people aware of the existing means that we have and how to use them. So we can also try to tap more into the remittances from the diaspora by allowing them maybe to participate, especially in the domestic market operation, while they don't have account here. So I know one of the requirements, like in order to participate in the domestic market here, you need to have an account. But maybe with the government looking into how people maybe don't have account here, they can invest in domestic market, thereby having more resources coming in Rwanda without more requirement. So there's also another platform maybe we advise the government to look into how we can be adopted here in Rwanda. This platform is used mostly in most of East African countries, Kenya and Tanzania, which can help to drive down the cost, especially the transfer cost associated with the transferring the remittance to Rwanda. Thank you for your kind attention.
Thank you very much, Peace, for walking us through your very comprehensive presentation. Shortly, we will prepare ourselves for the panel session, but as we do that, as we set the stage, we are going to watch a very short video that captures the report with what, just sort of summarizing what Peace has given us, the findings and recommendations. So over to the technical team as we prepare for the panel. video. Now we are ready for the panel session, and first I would like to thank Peace for what she has done. It's for that presentation. And now I'll hand over to Dr. Abba Prasad. She's our practice manager. Maybe you can just go up. Yeah, let's clap for her. Encourage her. She's our moderator. So she's in charge of macro and trade and investment global practice for the region of Eastern and Southern Africa. I'll let Abba introduce her panelists, and she'll also moderate the session. She'll also guide us on the Q&A. So Abba, over to you.
Do I have to use that? Thank you so much, Kisaya. Honorable Minister, distinguished guests, my panelists, and World Bank colleagues, good afternoon to everyone. I need to hear a good afternoon. Good afternoon. Yeah. Please may I ask our panelists to come on the stage. Perhaps I can start introducing them. I can use that mic. And how do I do that? It's working? It's on. Fantastic. Thank you. So let me introduce them, and as I call out your names, I'll be grateful if you could come onto the dais, please. So Dr. Diane Karusisi, she is the... Thank you for the applause. Yes, we need some excitement here. She is the CEO of the Bank of Kigali, Rwanda's largest commercial bank. She led the bank's digital transformation and expansion of the BK Group into general insurance, investment banking, and technology. With a background in economics, she held key positions at the National Institute of Statistics and at the Office of the President of Rwanda. Dr. Karusisi serves as a non-executive director on various boards, including the Rwanda Development Board and the University of Rwanda. Her leadership drives growth and innovation, making her a very respected figure in Rwanda's financial industry. I didn't mean to embarrass you. That is what I got. Dr. Moise Bijirimana. Moise is a manager, financial inclusion and education in the National Bank of Rwanda. He holds a doctorate in enterprise management, specialized in financial management from Wuhan University of Technology, China, and an MBA specialized in finance. Before joining the National Bank of Rwanda, he was a lecturer at the University of Rwanda, College of Business and Economics. He has several articles about financial inclusion in peer-reviewed journals. He has taught accounting and finance courses and in the various levels in the different universities in Rwanda for over a decade. So welcome you. Mr. Herbert Asimbe is the head of financial sector. Herbert. He's the head of financial sector development department and also the director general for banking and non-banking sector at the Ministry of Finance and Economic Planning. He has led key financial sector development policy reforms and innovations for the government of Rwanda. He has over 15 years work experience in financial sector development, especially developing financial sector policies, strategies, supporting capacity building and skill development, resource mobilization, building partnerships. He also has worked with the director on numerous institutions where he's represented the government of Rwanda. A warm welcome to you. Let me now call Mr. Regis Rujimanshuru, and my apologies if I say the name not correctly. Regis, please. Regis serves as the Chief Executive Officer at the Rwanda Social Security Board. Prior to his appointment, he was the Chief Digital Officer of the Bank of Kigali, where he oversaw and led the digital transformation of the bank. And his main focus areas is the intersection of business and technology, and his expertise is in transforming large and complex organizations to realize the promise of the digital revolution via adoption of business best practices and standards which are fit for the digital era and very relevant today. He's known for his high energy and contagious passion in solving complex problems. And he told me not to say it, but I will. Welcome. And finally, least but not very, very important for us, is Mr. Zano Mataruka, who is Zano is the IFC's resident representative for Rwanda and Uganda. Prior to becoming the resident representative, Zano was the hub leader for agribusiness in Southern Africa. And since joining the IFC, he's worked in Nigeria, he's worked in Johannesburg, in South Africa, and as well as in the headquarters of the IFC in DC. And he's responsible for investing more than $700 million in agribusiness companies across Africa. He's also executed IFC investment deals in Latin America and Asia. And prior to joining the IFC, Zano was the director of corporate finance at Nedbank Zimbabwe. He's also what we call the climate anchor for our sub-Saharan Africa region for the IFC. So welcome to you. So I must say that I'm very much privileged and very honored to be here to moderate this session with such an esteemed panel with me, and I don't want to spend too much time, so I'll jump right into my Q&A. And just, I think all our panelists know that we are trying to make sure that we have time for the audience. So please keep your question answers ready. This is also being live streamed, so if we get questions from there, we would be happy to take them on board. Keeping that in mind, we have a set of questions for our panelists, around 5 minutes each. And one of my colleagues in the audience is going to sort of warn you that you're on 3 minutes and 5 minutes, but I'm sure you're going to keep to the time. So with that, let me first turn to Dr. Diane. and ask her this question about, the report has been mentioning these recent developments in the banking sector that has enhanced saving mobilization, especially in terms of the percentage of Rwandans utilizing the banks for savings. Yet the overall savings rate in the country remains low as compared to its regional peers. We saw that it was way lower than what was the story in Tanzania and other such countries, Ghana, etc. From the banking sector perspective, what do you see as the major challenges to attracting more savings from households and firms in Rwanda?
Thank you very much for having me this afternoon. Obviously, as a banker, savings are critically important for us because our job is to intermediate savings and deploy them into investments. So if there are not enough savings, there's nothing to intermediate, right? We cannot deploy this money into productive investments and loans, etc. So it's actually very critically important. So it's good to see that we are attracting more clients that are saving, but I think the major challenge has been first of all, is not enough channels. Today, most banks cannot enable people to open a savings account on channels, right? I'm lucky that, BK, at least I can say here that you can open your app and start saving and open a savings account or even do a term deposit. But it's not the case for most banks. So this is something that we need to work on. The other thing is that we've not been innovative and creative enough. Because when you look at our population, our clients, most of them are young, and we've not been able to design savings products that are attractive. I think we've seen in other markets things like gamification of savings, save as you pay or save as you earn, things that are seamless. You don't feel that you're saving, yet you're actually saving. So I think we've not been very innovative and creative in designing savings products, but we are catching up slowly. And I think in the next couple of years, not months, we'll be able to have products that are attractive to the youth, and they'll be saving without even realizing that they're saving and supporting the economy. So I think that creativity has been lacking, and we are working on that. Finally, I think we need a lot of awareness. People don't really understand how their micro decisions, allocations of their money into savings or investment, affect the macro view. So I think there's a lot of awareness and education that has to go out there, telling people that saving is actually almost a patriotic duty because we are able to enable development and transformation. Thank you.
Thank you so much. I think you really pointed out a very important fact about being more creative, innovative to capture, what the youth is, and some of the things which Peace also presented in terms of gender products and how you could, turn the micro to the macro issues. Yeah. Let me turn to Herbert now and ask him that among the key financial products that have potential to increase domestic savings is the insurance sector, but the uptake remains low. So what are the main challenges that you see are facing the sector, and what do you think the government is doing to strengthen the sector?
Thank you very much. I want to agree with you. It remains a challenge. The penetration of the insurance sector remains low at 2%, which gives an opportunity to the insurance players of, capturing the remaining 98%. Globally, the penetration of the insurance products is around 7%, 7.2%. It's only South Africa that is around 12%, but that has come with a lot of, product innovation, awarenesses that, come with such, complex products. Talking about the challenges that we are looking at, one, from the demand side of these products, we've seen Ejoheza eligible members. Each Ejoheza member that has subscribed fully to their account, we give them a life insurance. And this is done again to educate the Rwandans about the importance of insurance, and they have tested it. And with this, we continue to see that people are coming up and asking for it again, which has, impacted positively the uptake of Ejoheza. So, on the demand side, on the supply side of these products, we haven't really seen that innovation with more products on the market that really pull everyone in to uptake. So we are yet to see that innovation with products that are really interesting for the citizens to take up. But also to say that the insurance sector is also trying as much as they can to continue to skill their teams. They're investing in actuarial scientists and analysts to come and do the numbers and push new products to the market. But we haven't seen that. But I think going forward, we are seeing a brighter journey in the coming years. So those are the two big challenges that I see, both on the demand side and supply side of insurance products, which keeps the penetration very low. Thank you.
Thank you very much. Thank you for highlighting the demand and the supply side challenges that you're facing. And I see a common theme coming from what Diane also said in terms of innovation and the communication and making people understand. And you also mentioned about the Ejoheza scheme, which is a brighter future for all Rwandans and has been both in the formal and the informal sectors and really touted as a success story and praised across the continent. So with that, let me turn to Regis and ask him that in terms of this Ejoheza scheme, what are the next steps to increase the number of participants and their level of savings into the system? What do you see about that?
Thank you, Dr. Abba. And congratulations to World Bank for organizing another successful edition. About Ejoheza, much has been said in regards to where we are, over 3 million savers and close to 60 billion Rwandan francs in savings or asset under management in less than 5 years. But looking ahead of what's being done today, as more work needs to be done to increase the saving rate domestically. A lot that is really being done today, especially in partnership with some of the partners here in the room, including the World Bank, is the improvement on the value proposition. There's room to make the product more attractive, especially in comparison to the alternatives available, like the Ibimina, the savings groups, or other informal sectors. Some of the upcoming features will include a dual account, where we allow members to access part of their savings easily, depending on a ratio of how much they have saved. We will continue to make sure we're investing safely and cautiously to make sure we are guaranteeing higher returns in comparison to what's available, but also to ensure the easiness or smoothness of accessing the products. So we are improving today. In a couple of weeks, we'll be launching Ejoheza 2.0, a new, completely much better experience that allows local people to save, but also diaspora as well. In the long run, what we are working on is to work with the Ministry of Education to teach the culture of saving from a young age, where from at the same time you're learning the values of our country and the whole civic duties and rights. You're also learning I like what Dr. Diane said about saving is one of the most patriotic things you can do, and assuring that these behaviors and the benefits of it is taught from a young age, so that from the first franc you will make, you probably think of saving a third of that into your long-term savings, but also contributing to the value proposition. So a lot of what we're doing is listening more, do a lot of focus group with our members who tell us what will make them save more. So there's a lot of awareness, in improved value proposition, and we are working with the Ministry of Finance on having these passed very fast, very soon, but also continuous innovation around the customer experience. and so that this saving is intuitive as you send a Momo or Airtel cash, as you save to your bank, as you pay tuition fees, as you pay your transport fees, so that it becomes intuitive and painless as you save for your future, but also contribute to the national development plan. So I'll leave it here, and then maybe I can complement towards the end. Thank you. And I hope everybody here is part of Asia Heza. So if you're not, you can dial *506 hashtag and make sure you self-register, and you can start saving from your bank account or your Momo account or your Airtel cash. Thank you.
Thank you so much. I think we have to clap. Yeah. So that's *506, right? Okay. And it's open to citizens and diaspora. Okay, great. So I think you spoke about the ease and the smoothness of us accessing the product and the e-Johiza, and I think that a lot of that is in terms of the digitization and the formalization agenda. So let me turn to Dr. Moise on that and ask him that Rwanda, in fact, has made notable progress in expanding digitalization and promoting formalization of the savings group. Could you tell us what's been the role of the BNR, and how do you see the next steps in promoting the financial inclusion agenda, getting in more savers into the formal side? Thank you.
Thank you. Well, when you talk about savings groups that are informal, the first challenge that people face is knowing how do we get data from them. So the central bank started with availing data to whoever is in need on these savings and credit groups. Although they are informal, they work with different practitioners, NGOs. We appreciate the collaboration that we have with them, and we have been able to create a map. It's called Savings Group Map, Savings and Credit Groups Map. So you can go to that map and know how many members are there. As of 2021, we had more than 2 million members, and they have been able to save 49 billion. This is a huge amount. And more than 70% of these members are women. So why have we created this map? It is to make sure that financial service providers who can be interested in these savings groups can know where they are. And they are able to view this by location, at least by sector level. We will extend and make sure that we are able to view this at least at village level. But as of now, you can have the view at sector level. But having data itself, again, if it is not useful, it is meaningless. So it only becomes useful when people who are supposed to use this data are using them. And through this data collection, we have added a component of asking ourselves. We have seen that fintechs have been interested in digitalizing these savings groups, offering formal financial services to them. And we have collected data. We have added questions on the need of knowing like how many of these groups are digitalized. Among 90,000 groups, only 2,000 were digitalized. And so we said then there is need to digitalize these groups. So we have drafted the savings and credit group digitalization roadmap that is yet to be launched, and it is in line with the National Financial Inclusion Strategy that is yet to be launched as well. So that's one. Two, we have been able to develop a directive that supports fintechs that are interested in digitalizing these savings groups. We used to have challenges that, these groups, when they save, the money is collected and deposited on a trust account. They call it a trust account, but owned by the fintech that serves them. So that was a challenge. That money was belonging to the fintech and not to the members. So we have developed a directive, at least to make sure that these group members are protected. And we are advocating, we are conducting awareness to these groups so that they can join formal financial services. But also we are calling financial service providers to have a look at these groups, to know that these people have been able to save. They have the saving culture. They were able to save. They take loan and they pay back. So this is a segment that should not be ignored. Thank you.
Thank you very much. Yeah, I think it's really important to have a knowledge, you need to have the data, but you rightly said, if it's not used, what's the point? And I'm also good to hear that you also have the scheme of protecting the members, because that's really key. It's informal sector, these are small savers, and they need to have assurance that their deposits or their money is safe. So let me turn to Zanu and sort of ask him on a different scale in terms of, the role of IFC's engagement has been basically on development and deepening the capital markets in Rwanda, and which is the other side of the equation. So could you tell us how this engagement has contributed to promote domestic savings mobilization and basically close the gap in terms of long-term financing in Rwanda?
Thank you very much for the question, because this is a very important program for us. We have a project in Rwanda called the Rwanda Capital Development Market Project. And the main emphasis of that project is to facilitate access to long-term financing, particularly for sectors such as housing, industry, and SMEs. And under this project, we've got 4 main objectives. One is to increase the secondary market in the trading of government bonds. 2 is to increase the supply and issuance of non-government bonds. And 3 is to develop and broaden the professional and investor base in Rwanda. And lastly, to also increase the capacity of regulators and market makers. And I'm glad that a number of the people on the panel, they are partners on this project. Now, for example, if you look at the money market, some of the things which we've done under this program is we've conducted an assessment of money market developments in Rwanda and submitted our recommendation to the central bank. We've also looked at the feasibility of introducing market makers in Rwanda in order to enhance secondary trading and liquidity. We've also looked at the potential of introducing on a pilot program, the market making pilot program, including the modalities and eligibility criteria. In addition to that, we've also looked at introducing the Global Master Repurchase Agreement. It's a feasibility in Rwanda. But in addition to that, we've also conducted a lot of trainings with some of our partners in areas such as asset allocation, bond and equity valuations, real estate, and so on. All these issues and ESG considerations, which are quite important today, all these issues are designed to deepen the capital markets in Rwanda. We've also explored, again, with some of our partners, alternative investment vehicles as a way of mobilizing the savings. So we believe that through this program, which is one of our flagship projects in Africa, it will help in deepening the financial markets. Because, as you rightfully pointed out, you can have the savings, but the savings need a home. Where are you going to invest those savings? Yes, you can invest in a bank, but people need quite a number of potential investment vehicles in order to be incentivized to make the savings. Thank you.
Thank you so much, Zanu. And absolutely right that you can have savings on one side, but you also need the financial intermediation, the role that markets bring in, and for governments financing and other sorts of making the wheels of the economy to sort of go around. With that, let me ask you one more question that, many businesses in Rwanda require local currency financing for their expansion programs. So what lending instruments that IFC have to provide for this kind of required lending?
We have 2 primary instruments. We have funded solutions and non-funded solutions. So the funded solutions, this is whereby we provide the loans directly, whether in local currency or hard currency. Now the non-funding solutions is, for example, where I would work, for example, with the Bank of Kigali to take some of the risk off their balance sheet through risk-sharing facilities. Now, what we found, as I said earlier on, industries such as the construction industry, housing industry, and so on, what they actually need is local currency financing. And a few years back, we issued one of the first local currency financing bonds in Rwanda. And since then, we've issued it in a number of countries. Of late, we recently issued it in Zambia. And currently, we are actually working on doing our second issuance in Rwanda. Basically, what it does is, because of our AAA rating, it allows us to attract investment at very favorable returns, which we're able to then pass on to some of our clients. But for me to be able to do that, I need a pool of investments so that when the money comes in, I will be able to deploy it. Thank you.
Thank you so much, Zanu. So let me look to the audience if there are questions there for our esteemed panelists. Yes, please, could you introduce yourself and very briefly ask your question? You don't have a mic? There she is.
Good afternoon, everyone. I'm Kevin from the Netherlands Embassy. Mine is just a suggestion and an input, because the big elephant in the room is increasing the savings and mobilizing the savings. I think what needs to be done is understanding the whole ecosystem in regards to customers and people who are in the informal trade sector. One key thing that always comes out is access to credit. They need money. They need money to do their businesses. They need money to expand their businesses. That access to credit is always a big question, and something that a lot of business entrepreneurs are always looking out for. So with EJOHESA and with the savings that is there, the incentive that can go in is ensuring affordable access to credit through digital platforms and having a revolving credit around that access to credit that is being given. A practical example is someone can access 800,000, 1 million francs, or even lower ticket sizes. And then out of that, a certain percentage of that can go towards savings. And that is just automatically deducted from the amount of money that the person is getting. And with the remarkable growth of mobile phones across Rwanda and people adopting the access to the mobile phones, then you can have specific tailor-made products to people in the rural areas, in the urban areas, that gives them access to credit. They can be able to save automatically, and even have a holistic bundle product where you also have an insurance product embedded within that access to credit that they're getting. Because once they know that they can be able to access affordable credit, then it becomes easy to lock in, to get the savings, more and more savings, other insurance products that are within there, and now you're building our robust ecosystem and you're driving private sector growth because they have equitable access to credit. A good example is that is currently happening in Kenya with what is called the Hustler Fund. So the banks come in and innovate around the money that is there. So within EJOHESA, you have the banks that come in, and via the banking platforms, they can be able now to on-lend digitally to the population at large, and the government can also intervene and also provide money towards that specific revolving credit facility, thus enabling the growth of the private sector. Thank you.
Thank you. Let's take another question. I think the table there. There, just behind.
Thank you so much. I'm Enoch from Transparency International Rwanda. I'm a senior researcher. Comment really what the World Bank has done today to release this 22nd edition, which is very informative. And again, I would like also to appreciate the updates given by each panelist here present. Now, my question is, based on the finding that we have had today, that the informal savings, they are greater than the formal ones, this really somehow left me uncomfortable in terms of sustainable planning on the side of policy making, which is present here also. Now, considering the entire financial ecosystem, what have we learned from what we have implemented in order to allow us to take care of them in the future design, to see how the informal sector can be channeled much to the formal one? Again, I would like to ask bankers here present, Lily, what do you feel, do you think that your innovation that you are planning to have in place are going to help you to attract this portfolio of 49 billion or more than this? What's really kind of mode of advantage or benefits distribution model are you going to incorporate in your innovation, whether technological or managerial innovations that you are planning to have in place? Thank you so much.
Thank you. If there is one more question, yeah, there is a gentleman at the back here, and then we'll seek answers.
Afternoon. I want to take this time to appreciate each and every one of you for this great meeting, and to our Honorable Minister and our panelists, and for those I give the updates, I want to say thank you. So, my names are Emmanuel Steven Kamara from the Family Magazine, and I have a few questions here. And my question I want to know what are the strategies that have been put in place to reduce poverty in Rwanda. And also, I want to know how Rwanda have increased or will increase its human capital. And lastly, I want to know what is the present GDP of Rwanda. Thank you.
Thank you so much. So let's do one thing. Let's answer the questions raised by Kevin from Netherlands on the issue of the affordable access to credit, the issue of getting, mobile phones, and Kevin, I stay in Nairobi, so very well familiar with the Hustler Fund issue there, and how we can have more tailor-made products. So for that, I would turn to Herbert and Regis, and on the issue from Transparency International on what lessons have we learned, and how can we have more of the, informal to the formal, the issue of sustainable planning, and what lessons and how can we go forward? Maybe Moise and Diane can take those forward. On the issue of reduction in poverty and our human capital agenda, if I could take the liberty of asking Sar to explain a bit about what the World Bank is doing on this, and of course Zano afterwards. Thank you. So over first, on the first question to Herbert and Regis on the issue of affordability, access to finance, the revolving credit schemes that he's talking about, and then to Moise and Diane. And also please feel free to intervene in areas that I have not touched.
Yeah, thank you very much. Just to answer your question, I think it was more of an intervention and an idea on what we could also consider. In the design of Ejoheza, for example, we designed the scheme in a way that it speaks to the people and their needs. We spoke to them and we designed the scheme for them. With Ejoheza, you're able to access up to 40% of your savings and be able to use it for small business. You're able to use the same money. If you don't want to take it out, you're able to take it out as a collateral. RSSB, Regis will talk about it. They will print your collateral that you will take to a bank and be able to access a cheap credit. So those are some of the things that we innovate with such schemes to be able to enhance credit to the private sector. But most important, credit to the people that earn, less income. Just to also assure my learned colleague, the researcher, that Rwandans are saving. Actually, Rwandans are saving. Up to 86% of Rwandans, according to our Finiscope, are saving. They understand the importance of saving, and they have, opened up, bank accounts. They have opened up accounts with Ejoheza. Ejoheza is a 3-year-old baby, but as we talk right now, we have about 3 million savers into Ejoheza that have saved, up to 56 billion. This is money that is out there. These are savings that the banks are accessing, the borrowers are accessing, and these are also contributing to the bigger term deposit that is, also around 753 billion. This is hard cash that is from the savers, from our savings that we put in the banks, but also with our colleagues at RSSB. So again, just to make it clear, the informal savings are not anywhere close to the formal savings. We have, growing savings that are formal, that are seated in the banks that they're accessing and using. Maybe if Regis would want to add one or two things.
Yes, thank you, Albert. Thank you, Albert. I think I won't go far through what you said. I'll complement that to say thanks, first of all, for your intervention and the reference to the Hustle Fund in Kenya, to which we've been talking and learning from each other. What we are doing, while the facility is embedded within the design of Ejoheza, what we are doing more or better is to make it more accessible. While this is available, most members either might not be aware, so there's a road to more awareness, but making it easier for banks to innovate around to what you refer to. There's somewhat what we have started doing, not just on Ejoheza, but also on actually formal pension fund, integrating with banks to allow them to create credit scores, for instance. If you know how much someone is earning on a regular basis, their work history, stability, how much additional saving they have into the Ejoheza, or how much just purely savings they have into Ejoheza if someone is a farmer working in a mine and looking for that small loan they need. We want to make it easy, where in Rwanda you also start getting, and I want to congratulate the Bank of Kigali for being one of, but if not the first bank to not only allow you to open an account on the go, but also allow you to borrow on the go. And by availing this data and helping our member be aware of how much, through any of the respective banks that will integrate with us, how much they're eligible for, then that value proposition I spoke about earlier, it becomes more evident. People become more aware, and they get more incentivized to save more because they can see, on the other hand, what I get. Because ultimately, while people are saving for the long run, they have basic needs they have to fill today. That tuition fee, that transportation, when the salary is not there yet. So 100% agree with you. Good news is that it's in the making, and want to encourage other banks also to seek that partnership, because we're open, and learn from some of those banks that are ahead, are innovating and doing. But it's in the making, and soon, hopefully, we'll have more offerings around that. Thank you.
Over to you.
Thank you. Just to emphasize that, yes, people in Rwanda save, and people in Rwanda save in different ways. In the report, I saw that the emphasis has been on our level of financial inclusion being at 93%, but then to mention that formal financial inclusion stands at 77%. So we still have a long way to go when it comes to 100% formal financial inclusion, and this is the target. So back to what Enoch asked on the lessons we learned from these groups. We have seen that numbers keep growing, like more people keep using these informal savings groups, despite the availability of different products, formal financial services and products, but still people have continued using these informal means of saving and borrowing. Actually, the aspect of borrowing should be also added, because these are called savings and credit groups. So in the recent update that we have made, we have gone further and asked this question. FinScope survey has shown us that more people are joining formal financial services. That is good. We are happy about this, but still, there is growth in use of informal financial services. And then we took a small group among the savings group members, and we asked them questions on why do you keep using these informal means despite the availability of different formal financial services. The main response was, for us, we see that the cost of financial services are high. Why do they perceive this as high? I'm not here to say that, to judge that they're high or not. This is what the respondents said. For them, when they save their money, as I said, they have been able to save 49 billion in just 1 year, 2021. And they have been able to give loans to members from the 49 billion, they have given 39 billion. So how do they do it? They use the savings and then share the savings as loan to members. So whoever receives money pays interest, a small portion, that is 5%, between 3 to 5% in most of the groups. And then that amount paid back plus interest, the interest is shared among members. So for them to take a loan from a formal, from any financial service provider at a rate that is far beyond 5%, they perceive it as high. But of course, there is a challenge of growth. Most of them have, they need a lot in comparison to what they have. And some of the financial service providers, some of the banks, some of the microfinance institutions have started lending to them, at least those that have learned that, we need more. But then the way the model is different to the services that are provided outside here. Maybe there's a question that you actually added saying, how can financial service providers, tap in this segment? I'm not quite sure I'll be the one to respond to this. Maybe, I don't know if you can take it, Dr. Diane. But at least focusing on fintechs, the central bank has put in place the sandbox regulatory framework. So we encourage innovation, and we make sure that whoever is having innovative ideas, not only to serve saving groups, anyway, it's not for the sake of saving groups, in different areas. Recently, we have called for sandbox focusing only on insurance. So we want to encourage innovation, and innovation that brings solution to the existing problems. So how can financial service providers innovate? I think the regulatory framework is open. We encourage this, and we are seeing innovation. There are some good progresses, but still we have a long way to go. And as the lesson, yes, we have the groups, they are able to save, but they are informal, and we don't want to change and make them formal. That's another thing that we don't want to change the DNA of savings group, but we want financial service providers to bring formal financial services to them. So, and this becomes a challenge then. So if we change the nature of groups, maybe some of them will not even be disclosing that they have this Ibimina. But if we can have products that are tailored to the needs of these groups, then we will be successful. Thank you.
Thank you, Dr. Dian.
Thank you. I think I'll take the question on how do we attract savers in Ibimina to save with banks. I think when you think about it, Ibimina is almost like investing in a mutual fund, right? Because you pool funds together to get a return, right? So I think we Some organizations have started. You probably know the Aguka Fund, which is a sort of money market mutual fund by BK Capital. You can invest little money. Its minimum is 10,000, and you can actually get a return that is up to 11%, which is actually quite attractive. And beyond attracting the individual Ikimina member, you can attract actually the whole Ikimina and tell them, you have this much money that you've been able to collect, invest it with this fund, and you get this return. And I think this helps to educate people around opportunities that are there for investment. So the other question that was interesting, or maybe comment, is on bundled products. Probably people here know, when you apply for a mortgage, most time the bank will also require you to have a life insurance, policy. So in case something happens, God forbid, the loan will be taken care of. But I think there's room for us to improve these life insurance products. And as you pay your installment, if you pay a small portion that actually goes in the life insurance package, as the product, and it will not wait for you to die only to cash in. But after a few years, you'll be able to actually get a certain amount that will help you start a business or repay your loans or whatever, attend to any other need. I think we need to be a bit more creative on how we bundle products together. So we put credit. Everyone needs a mortgage. You'll have a fire insurance policy. But how can we add a life insurance policy that will give you a certain amount after 5 years, 10 years, etc.? So that's something that we need to continuously work on to improve the experience of clients. And finally, there was a comment around informal, formal. I don't think informal is bad, and I don't think we want to convert informal into formal. I don't think that's our job. What we need to do is to design products that's attractive to anyone. When you look at the disruption we've seen in the past probably decade, where banks were only opening accounts for people like the ones that are sitting here, and not actually going down to the Umuturaye. We've seen now the telcos have come, everyone can transact, and irrespective of they don't ask you if you're informal or informal, right? So I think that's where we need to go and be able to design products that are attractive to everyone. And we need to be smart about it. You cannot just wait for people to graduate for you to serve them. So you need to actually find them where they are, discuss with them, understand their needs, and design products that are not only attractive, but also accessible to them. Thank you.
Absolutely. Thank you so much. I think, Zano, if you would like to add anything?
Well, just wanted to complement what Diana just said. And at times, I think we learn from each other, right, from other markets. So, for example, when I was in South Africa, the banks realized that there was a huge market for these informal savings groups. They call them Stockvels, right? These are, and mostly women, and they were sitting on a lot of cash. And the banks started approaching them and designing products which are convenient for them. Now, in South Africa, because of the issue of crime, that also then helps incentivize those savings groups or Stockvels, as we call them, to open bank accounts. But I fully agree with what everybody else has said. Thank you.
Thank you so much, Zano. I think it's really an important point is that you really don't want to convert those informal microfinance, tiny self-help groups into something formal, but make sure, as you said, get the formal sector to them, so support them and make sure you have the tailor-made products. And I really like the idea of bundling, as you said, for instance, I didn't know that I once had a power outage and my fridge, everything was spoiled. And somebody told me, hey, do you have a credit card from this company? I said, yeah. He said, well, your house is insured. And sure enough, the credit card company paid for all the things that I had in my fridge. So that kind of bundling, and so now I'm sure I buy the insurance as a separate product too. I think that's very important. On the question of poverty and inclusion, I think it's sir, as you said, it's really important that one of the steps to reduce poverty is to definitely have economic transformation, structural transformation, to make sure that there are better paying jobs, more skilled jobs, and financial inclusion intermediation plays a key role. Sar, of course, had outlined a lot of work which the World Bank is doing. I would urge him to please, come forth, because this is definitely the mission of the World Bank, is to reduce poverty on a livable planet. So I would urge Sar to come and tell us a bit of, the issues there, please.
Okay. Yeah. All right. Just quickly, as Abba said, that's the mission. We have a fairly large portfolio here that addresses a range of things to help with poverty. For example, agriculture is an area where we are providing quite a bit of support in our portfolio, geared towards helping to improve agricultural productivity, supporting irrigation, market linkages, if you will, water efficiency, and so on. So that's a big part of our portfolio. About 11% of our portfolio is geared towards trying to help boost agricultural productivity. Then education, is an area where we are providing quite a bit of support to help improve the numbers on the human capital side, help with sort of developing skills that would help tailor towards, jobs. Infrastructure is also another area where we are providing quite a bit of support to help create jobs for people. Climate change support also, in terms of trying to help with nature-based solutions to help reduce vulnerability, to, if you will, climate challenges, droughts, floods, etc. And social protection is also, quite a bit of support goes towards that, either through cash transfers, social registry, which coincidentally we're launching tomorrow with the Ministry of Labor, local government, sorry. So essentially all of these, constitutes about 51% of our portfolio. So there are a range of different ways that we are targeting to help support the government address the challenges of poverty. So I will, perhaps Peace can talk about the GDP question that you asked. I don't know if Peace is still in the room.
Thank you. Maybe I'll give some statistics that we had over the last decade, where we have the GDP of Rwanda growing by more than 7% per year. I would say is that exactly 7.5 if we exclude especially the recession we had in 2020 because of COVID. So that was the highest growth in Africa after Ethiopia. In terms of GDP per capita, Rwanda was the first, with 5% over 2 decades, since the 2000 until 2020. So Rwanda was among the fast growing countries, especially driven by the services that the country has adopted, especially through the mines sector over the last decade, and especially through the construction sector also that drove growth since 2010. Thanks.
Thank you so much. We are coming to the end of our panel discussion, but would be happy to take one question if there is any. Yes, please. Please.
Thank you. I'm George Bagabu. Thanks for panelists, but my concern is about issues relating to savings. As you said, remittances are one of the components that can improve on our savings. However, there are associated the challenges of remittances. relating to the 3% reduction from where the money comes from, transaction costs that are stubbornly high, issues relating to volatility and exchange rate. So on a policy perspective, I'm wondering if there is something done to ease that. Thank you.
Thank you so much. Maybe Herbert, please.
Thank you very much for that important and pertinent question on remittance. We truly understand the challenge. It's one of the questions, again, that came up during the Rwanda Day for my colleagues that were there. Rwandans, again, in the diaspora brought it up. It's a challenge. The cost is a challenge. It's not only a challenge to Rwanda, but also other nations. Globally, on average, it's around 6.2, but we've seen it high in other countries, like South Africa. Those that come from South Africa, it's way above 10, and it's a big challenge. Why? When you look at the service providers that are providing this service, like Western Union and World Remit, Dahab Shield, and others, one, they are running on their own rails. Their costs are actually not expensive. It's usually like 1 or 1.5, but because they run on other rails and clearing systems from other banks, but also the exchange rate loss, that brings it up to around, takes it to around 6%, 6.5, which becomes a challenge. We've also had issues related to tax, related to that service, and as the Minister of Finance, we really want to look into that. If the tax is really huge to contribute to that figure, we are happy to look at it. But one of the things that we are happy to say is that I think we are going to engage the private sector. We are going to engage the likes of Bank of Kigali, their tech house, and ask them to, and other fintechs, to innovate around this opportunity. When you go, those that relate to Zimbabwe, with their growing diaspora in, London, the UK, and South Africa, they've come up with their own solution. They have, I think it's a product called Mukulu. My Zimbabwean friends used to use it. This product has brought up this cost way high. It's usually around 3% to 5%, but this was invested in by their own entrepreneurs, their own fintechs. So, and all their citizens are now running on that rail, and they are using it to remit money back home in Zimbabwe, and that is coming from UK and South Africa. Ethiopia, they have their. I've also read about their system. They have their system called Kifia. It's also done by a tech company. Kifia is used widely by most of their diaspora people to remit money back home. And again, this is usually money to help their families and other things like that. So I think we need to bring in and encourage competition around this space, and see how we can work with the tech houses to introduce their platforms and push them out here, and we take them out to Rwandans in the diaspora. Otherwise, if we don't do that, central bank don't regulate these rates, so they won't do much about it. And all these existing service providers are going to tell you that, they've invested in their services, so they have to pick up their charges. So we need to have some bits of innovations with our own tech houses, but also I think to a big extent we might also want to engage the existing service providers and know and negotiate and see how we can bring these costs down. I think that's what I can say for now, but my colleagues, Regis and Dr. Diane, could add something if they feel I've left out anything. Thank you.
Thank you so much. I think we've had a very interesting discussion, and I really thank the panelists. I thank all the participants for your questions, for your engagement, and for being here, and for the panelists for your deep knowledge. I can see that there is a very wonderful blend of both policymakers and practitioners here who are here. And I truly look forward to the EJO-HESA 2.0. I can see there's a lot of ideas for innovation, for creativity. There's also the regulation, which is going to back this and making sure the safety of the deposits, the schemes, the savings themselves, the issues of capital market, the issue of education, communication, building in self-awareness. There's a whole agenda, and I'm really glad that we had the best people on the panel for this. So let's give them a big round of applause. And a round of applause to the participants. Thank you very much. Thank you. Thank you. Very welcome.
Thank you. Thank you very much. That was a very engaging session. Thank you, Abba, and the panelists. And I think we need to give them another round of applause. They have done a good job. So we are about to come to the end. And at this moment, I would like to invite Sir to give us the closing remarks. You want to do it from there? Sure.
Esteemed guests, colleagues, I want to say thank you to the team that organized this event, and most importantly to all of you in the room and those online as well who honored the invitation today. Our exchanges confirm the need to boost domestic savings to support government shift to private sector-led growth and reduce vulnerability to external financing. This forum, today also discussed outstanding achievements made by the government of Rwanda, pushing for financial inclusion and the increase of savings, including some of the most innovative solutions like the long-term savings system, the EJO-HESA, which roughly translates as a brighter future for Rwandans. The formalization of the credit savings group and the robust digitization agenda. As discussed, some of the low-hanging fruits that could yield significant results include making EJO-HESA more flexible, as well as further densifying the insurance system, and leveraging mobile money system and remittances. As indicated in my opening remarks, the government of Rwanda can always count on the World Bank to tackle critical challenges for its development vision. Our team will continue this conversation with relevant stakeholders in the government and outside the government with the view of taking forward some of the recommendations developed in the report or have been discussed here today. So many thanks to all of you for your participation, and we hope to see you at the next Rwanda update. Thank you all very much.
Thank you all. The report is online, and the technical team has put that QR code. You can actually scan it, and you'll be able to get the report. Otherwise, our social media posts contain also the report. And I'm told there is tea and coffee outside, so feel free to take, and you can leave at your own leisure. Thank you all for participating.